known as the Magnificent Seven. And no, we're not talking about the Hollywood blockbuster, rather a group of stocks skyrocketing in price. Network Finance editor Gemma Acton is here with the details on this. Gemma, shares in major US tech companies making sort of incredible gains.
Yes, last year was a terrible year for tech companies, for their stocks at least, because generally speaking, when interest rates go up, the share prices of tech companies go down. So you'd be forgiven for thinking that 2023 would be another awful year for them, given that interest rates are still going up. But in fact, there is so much hype and momentum and excitement around the so-called AI revolution, about how artificial intelligence is going to transform our lives, that those companies that are seen as best positioned to benefit from that, their share prices have been booming. Investors have been pouring money in. This has been going on all year, but even in just the last 8 weeks, we've seen around 28 billion Australian dollars pour into tech stocks. Some of them, for instance, Apple and Microsoft, have just hit new record highs. And you might not necessarily think of Apple as a leader in AI, but when they did their big new product reveal a couple of weeks ago, so much of it was powered by AI and sat beneath the innovation. So they're really considered as part of that league too.
And we have heard quite a few of these names, obviously, as you say, Apple, Meta. One company isn't a household name, Nvidia. Why is it so attractive to investors?
There are only a handful of stocks, Ange, that have passed the $1 trillion US mark in terms of market value, in terms of how much they're worth, which is almost 1.5 trillion Aussie dollars. So a lot of money. Apple, Alphabet, Microsoft are all on that list, Amazon. Nvidia has just joined the list, so it's doing incredibly well at the moment. Nvidia makes semiconductors or computer chips, and they're currently the biggest maker of computer chips for AI systems in the whole world. So, for example, ChatGPT that we talk about sometimes on the show, that's powered underneath by Nvidia chips. So many companies at the moment outside of the tech space, in the tech space, are cutting their sales and profit forecasts and reducing production. Nvidia said quite recently, we are seeing such a surge in demand that we're actually having to increase production, which is very welcome news to investors at the moment.
As you said, the past few years have been pretty brutal to the tech sector. An online tracking site estimates more than 200,000 employees have been laid off since COVID-19. So these share price gains, is it going to help them at all? Not much comfort for them.
Actually, that 200,000 number you cited of layoffs, that's just this year. So if you add last year as well, that gets us up to 360,000, in excess of that. Yes, and it's been some of the Magnificent Seven, as we call them, laying off people, but also small startups that just can't get the funding that they used to have. We need to put this in context, though, because during COVID, the tech companies went on a hiring spree. They hired hundreds of thousands of workers, and now they're taking a cold, hard look at their headcount and saying, OK, who do we actually need? And that's why we're seeing such a high number of job cuts. It's actually not the real techie tech people, the developers, the programmers, the coders who are losing their jobs. They're still in really high demand. It's all the ancillary workers, so recruitment and marketing, for instance, and admin and support services, middle managers. They're the ones who are losing their jobs. And yes, to your question, it is a really tough time for them, because it's not just the tech sector that's laying off people in those sort of roles. It's more broad. Banks are doing the same, and also industries, other industries, corporates in those who are doing the same. So should you lose your job in a tech company, even if it's not a tech role, it's going to be quite a difficult time to find another one.
OK, thanks so much, Jem.
Thank you.